Are you looking to get a funded trading account? I know nowadays there are a lot of options for you. But here at Trader Funding Program, we do things a little bit differently. Plus, we're run by a group of traders that have decades of experience on trading desks and trading floors from around the globe. And we have a simple set of guidelines for you to follow with no hidden rules. And plus, we give you tools to help you become successful, like using ForexAnalytix, like being in a community of traders where you get to talk to people like me and other ForexAnalytix analysts all throughout the day. If you take an assessment during the month of July 2024, you're going to get a one-on-one consultation with me, Blake Morrow, President of ForexAnalytix. So join us today. I look forward to speaking with you soon.
Welcome back, Mish. I missed you last time. Good time to talk to you with all the tremors in the market here. What's on your, top of mind for you lately, Mish?
Well, a couple of things. Number one is everybody's celebrating the yay, disinflation, deflation. And even I was starting to think that perhaps that overlay chart that I have as my pinned tweet, and by the way, Blake, I am now following you, so apologies for that, was going to be a thing of the past. It wasn't going to happen. We weren't going to see the 1970s rhyme in the, here we are in the 2020s. But I'm not 100% certain yet that that's the case. So, because we have so many cracks that could create a sort of reemergence of inflation, as we know. I mean, the things have not really calmed down geopolitically. If anything, obviously, we've seen an escalation Middle East-wise. That's one factor. The debt, obviously, is still really, really high. And the one thing we were sort of anticipating was that the Fed might start to do exactly what everybody's anticipating, which is lowering rates at a time when it seems like a lot of what's happened with CPI and it's coming down sort of followed the path of what happened in 1977. And then we know things started to ignite again. Now, back then it was an oil crisis. I wouldn't necessarily say it could be an oil crisis. Obviously, we produce a lot more oil than we did back in the 70s. But it just still, I'm not 100% convinced. Let's leave it at that. Now, does that mean that I'm buying every commodity under the sun? No. I mean, I always have a gold position for the last several years. I actually added to my silver position yesterday. And it's up a little bit. I can see that here. Only because I feel like the metals will let us know my classic signs for inflation. I always love to talk about sugar. That really hasn't done very much, but it also hasn't gone down very much either. From 28 cents, yes, it's gone back down to 18. Now it's back over 19. But I would need to see that really start to explode to the upside, and we haven't. So that's the first thing, is that I'll give it up at the end of 2025 if we have not seen any kind of reemergence of inflation. And I'll go, okay, great, Fed, you did an unbelievable job. Congratulations. We are now back to somewhat of a normalization.
Well, you think the Fed had anything to do with the bear market in grains, which has really contributed to this disinflation talk and the decline in crude up until yesterday? And you've just brought up an oil shock. Most people are bearish crude, talking 60-ish and 40 later based upon global recession. But all it's going to take is one event in the Strait of Hormuz to change that picture dramatically. So, I've always been cognizant not to really be playing the short side of crude, because you could be right and overnight have it right in your face, like today.
Yeah, right, exactly. Well, yes, I agree with you on the crude side. I haven't really traded the oil market per se in a while, because it has been more on a decline. After it got through 80, it came back down. The $76 a barrel has been great support, and we're getting a bounce from there. But you mentioned grains. And I don't know if we necessarily have to see the grains participate in a major rally to say we're going to go into some kind of super cycle. There's other elements. Now, we talked about the obvious ones. There's still a stress on natural resources when it comes to AI and data centers. And even though we started to see some of those things go up like silver, like copper, coal, et cetera, they haven't really exploded yet. And so, and I say yet because if truly we are going to continue to increase the number of data centers globally, we do need these natural resources, which are A, still in somewhat short supply, B, vulnerable, like you said, to any kind of supply chain, whether it be the way oil would be or something else. And C, the miners have not necessarily produced as much as they need to produce. So it doesn't just happen overnight that you just like say, oh, we need more copper. Okay, let's just pull copper out of the ground. So I don't really want to start with the narrative of this, but it just sort of struck me as I was talking to somebody else yesterday that, you know, people have gotten very complacent about it, and I'm just still have it in the back of my mind. And gold is still well over 2,400, whether it's a flight to safety or somewhat of a sign of future inflation or what have you. It's still a sign of something that merits paying attention to.
Okay, so gold really has been the superstar. We've had quite a few false starts. I'd like your in silver. It all, always looks like it's breaking out, and then for some reason that doesn't happen. So
Well,
I'd like
right,
to
still,
I would just like to focus on really let's break out the telescope here, Mish. And I have to agree with you that I don't have to, but I do. The gold market is one of the only ones that's really given a real good signal long term. And when I say that, that means I'm looking at monthlies, right? So, and then I want your comment when you look at some of the other ones. So here's gold, clear
right.
cut breakout over 2100, right?
That was
Here's
that was
silver.
yeah, yes, gold, yeah.
Uh,
I
okay,
agree.
silver. I don't know.
Well, silver came,
Maybe
yeah. There are,
platinum. Platinum.
yeah. Let's take a look at the platinum chart.
Maybe.
But it's
But I
not.
mean, and
It,
and even palladium, and I always learned that in a true bull market that the white stuff goes first, leads. Like the gold silver ratio, et cetera. Look at palladium.
right.
So gold, definitely. Silver, uh, you know, it's got to start coming back. Here's the gold silver ratio, which is really, it's been a great instrument. And I also want to ask you if you see a correlation between the gold silver ratio and, say, for example, the dollar, even though the dollar was weaker. Do you think why would they be tied together?
Well, the dollar going down, obviously, we didn't even talk about the dollar, right?
Yeah,
And
yeah,
yeah, again, to me, what I see with the dollar right now, and for quite some time, has just been more of a massive trading range. I mean, if you really want
yeah,
to stretch it out, you could say between 103 and 106. We're getting a lot of support as we get closer to 103, as we're going to probably start to see again. And then we start to see a lot of selling coming in at 106. So I haven't really paid much attention to the dollar per se as a great lead indicator for what's going to happen, unless we either rally over 106 or we break
yeah,
down to 103. Then I would start to say, okay, that's going to be obviously another sign that perhaps we're not really out of the woods when it comes to all these stats on CPI and PPI and PCE. But I have been much more interested in the Swiss franc, and that has really. Can you put up an FXF chart so people can see it as an ETF?
sure.
FXF.
Oh, I love it when Mish starts talking currencies. Let's do it.
Well, I know this is a little bit of started out with a little bit of silliness in that in March, in the middle of the night, I got up and I heard FXF in my brain. And I've never really thought about, just like you said, Blake, I'm not a currency trader per se. I watch the dollar, I watch the relationships with the euro and the dollar, but Swiss franc, I'm like, why would I possibly be thinking about that?
Well,
And
that, I mean, from our, our formation as traders, that was the safe haven currency, right?
exactly. And look how in May you had that exhaustion
Yeah.
low, and then it gapped up and it never took out that low. I started buying it at around 97.70, just mainly because of the technical, but obviously because I was like, that's an odd dream. And yes, because of what you said, it is, obviously the Swiss is considered a flight to safety because it's a stable government, it's tied to gold. And so now, if you take a look at what's happening here, you can see that it really looks like it's breaking out. So then you have to think, what does that mean? So that's the currency that I've been watching and actually been in. And if we get closer to 103, 104, I would probably start to take some profit, but I'll keep a
Yeah,
core.
that could be a right shoulder up there, Mish,
Yeah, you never
right?
know.
Here's
Yeah,
your neckline, here's your left shoulder, here's your head,
well, to get a
104.
move from 97 to 101, even in a currency like this, is pretty good. I
Yeah,
mean,
yeah.
you don't get too greedy with these sort of things. But let's
Okay.
let's switch gears because the other thing that I had bought and sat with a little bit because I was convinced that we would see the TLTs go higher is the TLTs.
Okay,
Let's put up the TLTs.
you got it. There's a weekly.
That's a weekly. And look at that weekly chart. You can
Yeah,
see the breakout, obviously. You can see that we're getting over the 50-week moving average. And you could also see that if we get out over 95, that
yeah,
yield will obviously the long-term bond yields will drop. I've seen talk of disinversion of the yield curve, and then I saw talk yesterday of reinversion of the yield curve. I don't know if I necessarily focus so much on yield curve, but I'm just looking at Scott Henderson, harmonic measure to 104.76 on FXF. Thank you. Anyway, going back. So with the TLTs, it's such a double-edged sword with them. I mean, this is something to really talk about here because what would ruin the whole narrative we just talked about, Dale, you and I, about the potential of, a 1979 coming back looking different, but rhyming, would be, of course, if the long bonds going up with the yields coming down turns out to be more recessionary than actually inflationary. And that's why this is a very difficult time.
accompanied by risk off and equities.
Exactly, because right now TLTs are already starting to outperform the SPY
Yeah,
unless
by not really railing, just by moving sideways, it's outperforming.
right, especially when the SPY has come off,
Yeah,
although it's held critical support here at
yeah,
5,400 level.
right.
If that breaks down under 5,400 and this continues to go up, the TLTs and yields start to slip a little bit, regardless of what the Fed says. I don't know if I
Right.
will be I will be more interested in an inflationary move or start to think more recession. And the Fed waited too long
Yeah,
to
behind
actually
the curve.
easing the throttle exactly behind the curve. So these are all the things that are in my mind. Now, in terms of trading, of course, a lot of what I base outside of the commodity realm is my economic modern family.
Yeah. How are they?
Well, obviously,
Any
great.
of them on any of them on lithium after the last few weeks?
Well, only the transportation sector has really been, I think, the laggard. And of course, a lot of that had to do with the airlines and
Okay.
CrowdStrike. So I don't know if we're getting a true picture of the robustness of how goods and services are moving in this country if we're just looking at the transportation sector because of that. However, while Gramps, Russell 2000, obviously everything started to rotate into that, which is the healthiest sign we can see for the US economy. We're kind of again starting to consolidate in this range, and we need to get through 227 because that was the area from where it broke down last year. Actually in 2022 when we started to break down, 227 was a big area, and we've gotten up there and we haven't been able to get through. But right now, what's even more interesting to me is put up XRT, grandma. And while you're putting that up, I'll say, of course, regional banks also took a nice pop after being underwater for so long and ranging KRE between 55 and
Yeah,
6, between 50 and 55, or really 45 and 50, took
there's
out.
KRE.
Yeah, okay, so KRE has to get through 60, 61. That's where it broke
What a
down.
difference a year makes from
Oh
bailing them out to leading the way.
even if you
And
have,
and you know what? Those two markets you just brought up could be the reason, because there's, part of the reason they were folding was their books of long duration getting creamed after that big bear market in bonds. So bonds recovering takes some pressure off their books.
exactly, this is why it's so hard. I mean, if you're an economist right now and you're trying to say, this is definitely happening or that's definitely happening, I don't think that really, you can actually say that because, like you said, you're exactly right. With the
You have to
ease,
be so nimble right now that it's tough even for some pros.
right, but put up
I'm
grandma.
not including myself in that,
There you
but
got first one.
uh,
So
because
XRT retail,
yeah,
right? And it's a nice,
yeah.
I mean, we know that consumer discretionary retail has been really blasted over the last several months. And now XRT, which has a nice blend of staples and consumer discretionary, kind of like KRE, was in this big range, and now we're starting to pop up out of this range. And if
Yeah.
we can go to the regions closer to 80, 79, 80, and take that out, well, I mean, not only is that a great sign for the US economy, but it would be an incredible opportunity to get into something that has well underperformed and now may have major catch up. And of course, the implication is the consumer, as much as we've heard a lot of doom and gloom, is doing well, and that could really be the best sign for the Fed in terms of the soft landing. And that's why I say soft landing, recession, super cycle of inflation coming. Usually I can be very, very clear about what I see. And right now, I think you just have to be more very prepared for any of those three. And you have to watch those key areas we just talked about, right? The silver, the gold, the bonds, the dollar. You have to watch the small caps, the banks, and retail. And if you just really focus there, I think you'll have a pretty good idea of what, once we get through the summer, will be the thing as we get into the fall. And of course, the election, that's a whole other thing, but I never really want to ever trade off of any kind of political guess because, as we know, you can't always figure out what a president is going to do, even whatever they're campaigning on. It doesn't really make much of a difference once they're actually in office. So, and the best example
Well,
is EVs, right? EVs got crashed, which everybody thought under Biden would be a tremendous boom. And of course, oil has done very well. So, I mean, that's always my classic example of don't assume anything.
don't even assume there's going to be an election.
Oh, wow. Well, that would certainly be inflationary, don't you think, Dale?
Well, we'll see. I think we won't, and if there is, we won't know who the president is for several months afterwards.
Well, that's
Where do you
chaos.
think it's going to be decided? In Congress, the Supreme Court, or the streets?
Ooh, oh my God, there's a question. I like to think that it will be decided in the traditional way that, obviously we have the
Well,
electoral college versus the popular vote. And
okay, Pollyanna.
I mean, I don't know. I'm hoping, but
Yeah, well, yeah, yeah.
yeah.
Well, here you go. Here's hope. And you know what hope is?
What's
It's the
hope?
oxygen in our life, and it's the carbon dioxide in our trading.
Well,
Okay, so it'll destroy you in trading, but we all need to have hope. I have hope too, but I've never seen a situation like we have today. Just think of all the volatility of an assassination attempt, replacement at the ticket. Michelle, I'm pretty bearish a dollar. I think we're going to come out to the downside. And when people push back, they say, well, Dale, aren't you worried about the instability in France when they were going through their elections and the UK? And I said, well, what country has more political instability than the US on the planet? And that's an unusual statement to make, but that's where we're at.
Well, so we certainly included a super cycle of inflation as one of the potentials. And there
Yeah.
you go. If we had anarchy, which is essentially what you're talking about, where we have no president really, or no recognized president by the people, and civil unrest that ensues, or just this
There'd be
government.
a confidence crisis, and who would want to own dollars?
Nobody, and who would want to buy gold and silver?
Uh,
Everybody.
Right.
So right,
Yeah.
so that's why I'm saying this is why I think this is such a unique time. I don't think I've ever been, and when I say ever, I mean since like a long time, decades, so
Or never.
prepared for major recession, major inflation, or soft landing. I don't know.
Yeah.
I don't
Yeah.
know. And I think that that's probably the best thing I can give to people is that you have to keep your eyes open for any of those scenarios and not necessarily get yourself too attached to one particular scenario until we have more evidence, and we don't, because this is an election year and because, as you say, this could be very contentious, or it can go through peacefully. You got to say most people just want to feed their families, go to work, have fun, be left alone, and not really get so crazy. And of course, what we hear in the media is the fringe groups on both the left and on the right. They get the news, but I don't know if that really represents the majority. So we'll see what happens.
Well, yeah. What's the choice?
We'll find-
Check out. Anyway, I just wanted to, just show this dollar index chart. So we
Okay.
haven't gone anywhere, and you're right. It's been range bound. But once in a while, after ranges are taken out, and I'd say that the big bear signal would be down here. I think
Mhm.
we're going down there.
Wow.
But
Well,
you could take a measured move from here to here on a breakdown from par that could give you 85 in the dollar.
yeah, well, you and I have talked for years now, right? And so, I was a dollar bear all the way up at 112, 114. I was saying that
Yeah.
it peaked out. And so I'm
So
not
no
going to
one's
agree with
no
you. I
one's
think
paying attention now
yeah,
because it's been so, range bound. It's
range
lulled everyone to sleep.
kind of like KRE did. That's what I'm saying, for
Yeah.
months and months and
Oh, you
months.
know what I want to ask you, Michelle, is it's already come out that a Trump administration would want a weaker dollar. How did they accomplish it just because they want it?
Well, right. I mean, in order to get a weaker dollar, my God, I mean, well, first of all, obviously you would have to drive the interest rates down, and he's already
Okay.
talked about that. So, I think that would probably be the best way, or the best way. I mean, I hate to even use the word best, but a way would obviously have to be to get those interest rates way down again, and that would obviously put some pressure on the dollar. But I don't know why that would be such a great thing. I mean, do you really want the US dollar to give people even less purchasing power than it
Right.
already has, even at current levels? That's the other thing about inflation. People focus on the wrong things, where purchasing power is so much less than what it used to be. That in and of
Right.
itself is inflationary.
Nominally, yes,
Hmm.
because of what it's pricing as. So anyway, that's their policy. So it's easier to sell things, that we become an export-driven economy. I think that's republicanism from, I think it may have been McKinley or someone else, tariffs and
Right.
protectionism. But you're right, a weak dollar isn't going to serve the middle class either because they'll be paying more for everything.
Yeah, and let's go. You just mentioned something about, right. The other Trump policy is to have like 100% tariffs and
Yeah,
have everything produced in the US and make us a, extreme exporting country. All sounds great on paper, and it may be where we are in 50 years from now. But for right now, anti-globalism, bringing everything back on a reshoring basis, means higher wages for everybody, higher wages, doing everything at home, and having to spend the money to build the infrastructure to do that, then getting things out and not buying anything foreign, which of course, where the goods are cheaper, also sounds super inflationary to me as well. So when people say a Trump administration would be inflationary, that's what they're responding to. I don't know if that any of that would come to pass. And this is my original point, which is if you're going to position yourself based on what either Trump or Harris now is going to campaign on, that could be a mistake. Just watch what's actually happening. And I think we just laid it out. We have the bonds looking very ripe here. We have the metals still very, very strong. Even palladium is not necessarily participating. We have the grains, not necessarily a big worry, but we do have now the NASDAQ coming back today, which means we may see more money going back into NVIDIA and some of the chip companies. Of course, people are saying that China's preparing for war, in which case that would affect the chip. But essentially what we're seeing right now is that there will be certain raw materials that will continue to be strong because of the data centers, the geopolitical situation, and on top of that, we could actually flip more into a risk-off environment if the Fed was a little too late in easing up and the bonds start to really outperform the SPY. And it's probably a good time to be more relaxed. I am. I mean, obviously, there's always going to be things I'm interested in to buy. But I have from the discretionary side, a pretty light portfolio right now. And I'm just waiting a little bit longer before I start really getting super bullish. As I said, retail right now is intriguing me, but it's not quite where it needs to be to get extremely bullish.
Okay, I use my sister as an example, Mish, and we'll wrap it with this. And
Okay.
she said, Dale, I'm gonna sell right before the election. Okay, and then I'm gonna get back in the market after the election. And so when she told me that, I'm going, you know what? My sister is John Q. Public.
Uh-huh.
And if she's thinking that, there are multitudes that think it's clear sailing until the election, and then afterwards they could recommit. I think that's too pat, and I think that maybe what we had here in the last few weeks with key reversals and things like uh, NVIDIA and the NASDAQ and a weekly key reversal in the S&P, although NASDAQ looks to be the weakness, I would welcome a rally back towards 20,000.
I'm so sorry. I don't know
It's all
why.
right.
Yeah.
All right, so could it be that, Pat, that we're okay until the election,
Um,
Michelle? Or are we going to have this summer scare and everyone that was waiting to sell until right before November might get a little panicky and have a summer shakeout?
that's extremely, almost look like that up until really
Yesterday.
yesterday, right?
Yeah,
And even though we're getting a pass because AMD is up a lot
yeah.
after the earnings, and by the way, Microsoft held in the after hours that key level of
Yeah, it's
390.
having a good day. It's only down 10 after being down 30.
Exactly, but I never really was convinced, even though it was a fantastic way to make money in the first half of this year, that the tech market is the key to a robust economy in and of itself. It really, as I said, it does have implications for raw materials, but it's not the U.S. centric areas that we really need to see robust, like the small caps, like the banks, like the retail sector, and like the transportation. Ergo, my economic modern family, they exist for that reason, for us to see, is this a tech rally that's bringing everything up? Are we a little bit too premature in anticipating that tech is going to be the answer to everything and all of our lives are going to be amazing because of tech and nothing else matters? Or do we really need to see the other areas behind that, or maybe even leading that? So tech has its place, but really what we can see now is the US and
Yeah,
everything that's been working toward
Russell,
the
Russell.
Russells, right, exactly, participate. And that's another
But
big question.
yeah, that could be. But it was my contention that what led the market up would lead the market down, and that's exactly what happened. Despite the big shift that we had into cyclicals and the Russell. So we'll see. I don't know if the Russell could support a 20-30% decline in, you know,
In
the NASDAQ. We
oh,
had
probably
10.
not. Probably
We had
not.
10.
But
All right. So
it didn't do very
do you?
much though rallying while everything was going crazy. When
Yeah.
Sister Semiconductors, my other member of my modern family, was, you know, constantly making new highs, new highs, new highs.
Right.
The
Right.
family wasn't doing very much. So I don't know if we necessarily can say the logic is if tech crashes, that means trouble for everything else. I don't know if we can implicitly say that. But a couple of other
Okay.
things to leave people with some trading ideas. Things that really did poorly this year, like EVs, like solar
Yeah.
energy. You know, I'm looking for that to turn around as we get into 2025. I still really like the idea of the vanity trade, which of course would be totally tied to what we just saw in XRT. That is the result of the diet drugs. And we know that a lot of drug companies now are competing to create diet drugs, which means they would become more available and more affordable to the masses. We have a huge obesity problem. If that starts to be abated because of these drugs, think about what happens to these people who have not been able to keep weight off. What were they going to do? They're going to go get plastic surgery or fillers. They're going to start buying makeup. They're going to start dressing better. They're going to start exercising more because now they feel good. I'm looking at all those drug companies and also the companies that would benefit the most. And that I think is going to be another theme as we get into 2025. And these solar energy and EVs will come back, and also so will the infrastructure for that, and so will this area I'm talking about, the vanity trade, regardless, I think, of what happens, unless we have, you know, obviously some major crisis.
Okay, Michele. Well, you win the gold medal for your presentation today. You're at the top of the podium in my book every
Okay.
time you're here. And, you know, I'll take my bronze. You could have the gold. And really, really was great talking to you and seeing you. And I wish you and your team to have a great summer. And we'll talk again in the fall,
Right,
right
great. Thanks.
around, right
And go
around.
USA, right? Since you're talking metals, go USA.
Go
It's
USA. And Mish, thanks very much. Great ideas. You left us with some actionable stuff, and keep an eye on that dollar.
okay, definitely. And
All right.
I'll be seeing you around the block, you know.
All right. So here's our website, everybody. Check it out at MarketGauge, and follow Mish on X at Market Minute. And she has a lot of great videos, and you could learn a lot from Michele. I always do. And keep the hope, even
Okay.
though I'm a cynic with hope, Mish.
Right, I see your T-shirt, so there you
Yeah,
go.
keep the hope. It's not in Bitcoin, but it's hope anyway. So take it easy. Have a nice summer.
Thank you. You too. Stay
All
well.
right.
Thank you,
All right.
Blake. Bye.
Michele Schneider, and everyone check out her work. She's great at intermarket relationship and a very good trader. Thanks, Michele.
Bye. Mwah.
So that's a wrap, everyone. Good luck on the Fed. What's the Fed going to do? She probably left. What's the Fed going to do? Anyway, guys, good luck the rest of the day. See you tomorrow. Don't just count your pips, count your blessings.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.